At the time when you're going to need liquidity more than you ever needed it, Powell's going to be, I'm the Volcker here, I'm going to be the disciplined guy, and we're not going to do that again. I promised you I wouldn't do that. They will do it. I guarantee you that the easiest prediction I can make is that the balance sheet could blow up to 30 trillion or more in response to a free-falling financial system because they waited so long, because they kept thinking, as long as we stay the course, it'll right itself. And then all of a sudden they see banks failing across the world.
Before we get started, this isn't financial advice. Know your risk tolerance, do your own due diligence, and speak to a financial advisor. David Hunter is a seasoned Wall Street strategist with over 50 years of experience navigating bull and bear markets. Known for his bold contrarian calls, he predicted the parabolic melt-up that saw the S&P rise from 3,500 to above 6,000 and was still unfolding before the chaos of Liberation Day was unleashed. He is still warning that historic deflationary bust is on the horizon. Today we'll find out if he's updated his timeline on that. David, welcome back. Thanks for joining us. Let's ask the question that's on everybody's mind. Is the U.S. economy on the edge of the biggest bust in history, or will there be one last boom?
Yeah, hi, Al. It's great to see you again. I think there's one last, what I've been calling a melt-up, a final run to a top. Depends on what people think in terms of close, what the word means. I think we could see a bust as early as the end of this year, and bust I define as something bigger than a typical recession. Feels like a depression, probably bigger, something like 2008-9 on steroids, but happened within a time frame of a recession, not drawn out like the Great Depression. So it's definitely a very serious downturn and will come with what could be the biggest financial crisis in history. Yeah, from the standpoint of how big it is and the fact that we haven't seen a bust since the Great Depression, it's close. But close means months, many months still to run, I think. Doesn't mean it's imminent. Whereas, as you're saying, I think a lot of people think we're starting the bust now. So I'm not in that camp at all. I think between now and say the end of the summer, we're going to have perhaps one of the biggest rallies in history.
Wow. I want to get into that. So we last spoke in December. You were sort of looking at, maybe the markets were going to extend and melt up into Q2 at the most, sort of Q3, I think. Now, Trump, Liberation Day, that all went off the rails. We saw huge corrections. The Nasdaq's down more than 20%. The markets are climbing back a bit. The melt up is back on. Do you have any targets when it comes to the S&P? I know you were looking at 7,500 before. Is that still in the cards?
Yeah, actually, in the midst of the sell-off, when we were down below 5,000, I raised my target to 8,000. So while everybody else was getting more bearish and dropping targets and saying we could go to 4,000, we could go, people were playing leapfrog in terms of how low we can go, I actually got more bullish. And it's partly because I am a contrarian and sentiment plays a big part in. And at the bottom a couple weeks ago, we were looking at sentiment that was, by some measures, back to 2008-9, by other measures, back to the bottom in 2022. And yes, we sure had a sell-off in a hurry, but it was not that kind of thing. And yet that's where people's minds are at. They were already very skeptical about this market, one foot out the door thinking, this thing could roll over at any time. They were willing to stay with the momentum. As that momentum died, they were quickly turning more bearish, and then they got hit with, the tariff surprise. They had every reason to say, oh my God, the bust is here. And that's what you've heard for the last 2 weeks, I think, is people are anywhere from the top is in, we've seen the highs. We're now going to be in a major bear market that could take us down 30, 40, 50, 60%. And then there are others that say, well, we at least have to go back and retest the lows. So at least get back to that 48 and maybe go back to, say, 4,500. Some are even talking, the less bearish, but still bearish, are talking like the low 4,000.
Yeah.
I just don't think that's likely. Anything's possible. But what I see is that we had our retest earlier this week. Didn't get all the way down there, but we retested. You saw some of that same panic or concern come quickly back. We had that bounce that started with a huge bounce. And as long as it was going up, people were willing to ride it. Most were saying, sell into this, but they were willing to ride it. But as soon as that thing turned south a couple of days ago, you heard the same voices back again saying, see, I told you this was just a bear market rally and you better get out.
Yeah.
And then obviously that lasted a day. and we're right back, on the climb out of the hole. And I think we've got potentially before, and, this is just a guess, but maybe another few hundred points before we have some consolidation up there. And that consolidation probably doesn't take us, it might take us back to here, but not much below here. And maybe not even. And then I think we keep climbing from there. So yes, I think the bottom is in. Doesn't mean it's a straight line. There'll be periods, coming days and weeks, where you're going to have reason for the bears to come back out of the woodwork and say, see, I told you it's going down. Some of it will be 2, 3, 4 day type sell-off, could last a little longer than that, but I don't think it's, long drawn out consolidation.
So aside from that, you feel like we're on a one-way ticket higher?
Yeah, I mean, I don't want to be Pollyannish and say that you can't have posts on Truth Social that scare the hell out of people or get people right back to saying, oh my God, we can't get out of this mess, or this is going to go on for a long time. So you can get volatility. I'm giving you my best guess of what I think could happen, but I don't want people to think that I have any kind of vision of what's coming here. It certainly, I do feel pretty strongly that we've seen the lows, or if we haven't seen the lows, the retest is going to be successful just below the lows. I don't even think that's likely, but if we get a retest, I think it'll be successful. But in terms of the day-to-day, boy,
it's impossible to know. But, you spoke about the non-committal nature to this market. The fear is just right below the surface. People are tense, right? They're looking for reasons to sell. I feel like, for the first time, the debt matters. The tariffs have sort of given countries an excuse to zoom out, look at the United States and say, wow, they're going through $37 trillion in debt. This debt ceiling fiasco is coming, right? The U.S. is expected to default, by July, unless they raise the ceiling, which, of course they will. But it feels different. It feels like the world has an excuse to sell America, to look for other places, right? You've long talked about U.S. Treasuries and coming back to the dollar as a flight of safety. We did not see that this time, right? Biggest volatility, some of the biggest sell-offs since the 1920s. People were dumping the dollar. Do you expect that trend to reverse?
Yeah, keep in mind, I've had a dollar forecast of it was 80 and it raised to 82 sometime last year. So I've been looking for a big decline in the dollar. When it was back up at 109, I was told I was a fool, that I had no idea what the dollar was on a big run back to the 115 and higher.
Yes. Yeah.
And that was the top, and it rolled right back from 109, and we're below par, and I think we're probably going to see it down into the mid 90s before we may consolidate for a few weeks or something. But ultimately, I think we're going a lot lower. And I had that forecast. I didn't think it'd take this long to get there. I had that forecast while I was very bullish about stocks. So I'm not changing my mind just because the dollar's down. That was actually what I expected. So, and I have a 130 on the euro versus the US dollar. When it got down into almost down to 100, I think, I was told I didn't, there's no way you're going to see anything close to that. Euro's going down. And now we're at 114 and change, and looks like 130 might be low. So yes, there's a lot of concern about, the U.S. losing as the leader of the world, the idea that we are kind of different than everybody else and they can stand above the crowd. Everybody's worried about that. I'm very optimistic about what Trump is trying to do. It's going to be messy getting there. It's certainly a far bigger challenge than any president has ever undertaken in terms of trying to turn around 40 years of bad policy. I mean, we gave away the store for 40 years. And, you can't turn that around in 2 weeks. And you can't, he gets a lot of advice from all these experts out there, experts meaning people at their kitchen table a lot of the time, but even the so-called experts, that, I like what he's trying to do, but he shouldn't have been so abrupt. He should have been, more gradual. You're not going to get this turned around with gradual policy. Right now, he's negotiating. There's a lot of what we're getting. The funny thing is, I think Wall Street believed him more than the trading partners. He's playing hardball. He had Wall Street convinced that he plans to keep these tariffs in place because he likes the revenues. Wall Street bought that hook, line, and sinker. That's why they sold off. Our trading partners, I think, some of that is real, and some of that is posturing.
But David, you talked about it getting messy. I mean, is that not enough to trigger the bust that you've been forecasting?
Let's put it this way. I think we could find that some of what we're dealing with now, China can talk tough. They went into this with a weak hand in terms of their economy was already reeling. I mean, the real estate situation there is a mess. And their economy, we used to hear, a few years ago, if China's GDP was below their reported 6%, I think they were saying at the time, they're in crisis. Well, they're down closer to zero now. I mean, in reported numbers, I don't know what they're reporting, a couple percent maybe, but people were worried about revolt then. Yeah. You add in the fact that they're probably, they are in negative GDP, they are seeing deflation. And at the same time, you add in this, they can talk tough, but they can't stay tough for very long. I mean, they're going to have to negotiate, and Trump wants to negotiate. So it's just a matter of when the two egos kind of back down a little bit and say, hey, let's talk. So that's coming. China's going to be the tougher nut. I think you'll see, the UK and Japan and India, South Korea, some of those countries probably are going to, you're going to have deals announced in the next several weeks. So that'll help put pressure on China.
The pressure is building on China in a big way. One of my neighbors imports a lot of things and has a factory over there. And he said he has 200 containers sitting in the port. Can't move them, can't import them. And don't think he's alone, right? There's thousands of guys like that.
And think about their entire economy. It's based on not just the goods they ship, but also shipping itself. We worry about our port shutting down and the unemployment's going to come. What about them? I mean, they've got the biggest ports in the world, many of them, and they're just not going to be able to ship to the biggest market they have. So I'm not trying to make it sound like China's not going to play hardball for a little while, but I just think cooler heads will prevail at some point on both sides because we get hurt too. But to go back to the original question, how about the bust? Yeah, I mean, the risks are higher that if this thing doesn't get resolved in some reasonable period of time, that we just watch everything, the world economy go down. And that's why we had the sell-off we had. I mean, question and why everybody's bearish. I don't dismiss the idea that some of what is coming out of this will be part of why down the road we'll have a bust. Down the road meaning within the next 12 months and maybe within the next 7 or 8 months. It's not going to be evident in the next few months. I think what you're going to likely have, which is why I think you'll have the meltdown. I think the narrative that drives that, it's going to become clear to even the Fed, who's slow to catch on, that we're in recession before the end of this quarter. Now, whether it's clear in May or, you are getting buying ahead of the tariffs. So you could have it could disguise a recession for a little bit longer. But I think before we get to the end of this quarter, it'll be clear that we're in recession if we're not already now. So the Fed can, again, talk about we're comfortable with our policy. We can go either way. We think we need to stay, they are restricted, need to stay with where we're at until it's clear what the tariffs do. You're missing it because, man, we are in a recession probably now, and we are seeing inflation go down, not up. So you're going to look like fools like you did in 2022 when you waited too long and you were so sure you could take your time because you're looking at backward-looking data. You have to be able to put pieces of information together, and that's why I can forecast. These guys, their dot plots and things are all based on data that's already come in. So, looking backwards. You
can feel it. I mean, you just have to look around.
Well, that means there's going to be a moment within, I think it could be May, but certainly by June or July, be generous saying July, there's going to be a moment where even the Fed will say, oh my goodness, we can't just sit on our hands anymore. We've got to ease. Now, will they ease dramatically or will they do it a quarter at a time initially and then realize they've got to catch up? I don't know. But all these people who say, oh, there's probably no rate cuts coming for several months or maybe even only 1 or 2 left in the year, they're not doing a very good job of forecasting because this economy is slowing.
So your updated thesis, if I'm correct, is that, the catalyst for the bust could very well be the tariffs and the trade wars that develop over the next 3, 6, 9 months. But before that, the Fed's going to wake up, see that we're in recession, slash rates. It's going to look like things are kind of getting sorted out on the trade war side where people are coming to the table. Some deals will get done. That's going to fuel the final melt-up phase?
Yeah, I think so. For sure, the deals will be supportive. Secondly, I think it's the fact that, well, I'll get back to your Treasury comments before, because I don't agree with the fact that our debt situation is going to be a big story in the next few months. I think rates are heading lower. I've been saying for a while now that I would not be surprised to see sub 3% by this summer, and maybe even 2.5% on the 10-year. That's a big drop, from where we are. And everybody else has been looking the other way because of that bounce in rates.
David, that is literally the most important thing that we need to talk about, because getting to 2.25, 2.5 on the 10-year would get the U.S. out of the biggest bind that they've ever been in. You know as well as anybody that $9 trillion is maturing, right? This year has to be refinanced. Already 2.5 has been matured. The average on that debt is already about 3.2. On all the U.S. Treasury debt is about 3.2, which is the highest in 15 years. The whole game is getting that 10-year down, right? That's the back end. The Fed can cut all at once. How in the world are they going to get the back end, the rest of these countries, to go along with the 10-year at 2.5 or 2.25?
First of all, and I have not, when the rates went to 455 last week, and people were panicking, ready to jump out of their 10th floor apartment building, back up and take a little perspective, because back in early March, I said you can see a head and shoulder top in rates. There's a right shoulder at 450, and there's a gap that we gapped down from 440. So there's a gap to be filled at 440. So I said between 440 and 450 is where I'd expect rate. And this is when rates were down at 4.25. They went back from 4.25 back in March to 438, I think was what I saw. And then somebody said overnight it had gone to 440, so it filled the gap overnight. Then they rallied, rates went down first to 19 or something, then all the way down to 4% or just below.
Oh yeah, we got below. We got below the 4 handle during this big sell-off, yeah.
And then we had that big run up to 455 or 457. I said, it's just a round trip to where we were 2 weeks ago or whatever. And yet people are forgetting that we came down from there and acting like this is a big new run. So I was not worried about it at 455. If you remember, that same day it got to 457 or whatever, it was down below 450 again, and maybe 445 that same day. So it wasn't up to very long. And every story came out. They're selling their bonds to play hardball with Trump, and you had every bearish story coming out about rates going up. We're going to 5. I heard 6. Yeah, we're going to 6. And I said, I'm sticking with my view. We're going to 2.5. And ultimately in the bust, as you probably know, I've been saying we'll see a 0 10-year. But what you also have to remember about that, the refinancing, a lot of that is T-bills. I mean, the number is huge. If it was all had to be 10 and 20 and 30-year bonds, that wouldn't get done without rates going up. And don't forget, I think the odds are that during that period, the Fed's going to be easing, not just cutting rates, but probably will be in recession deep enough that they'll finally say, we got to expand the balance sheet again. We got to be doing some QE. So
yeah, I think it was so startling for people because, typically in my lifetime, when the markets are crashing in that way, you're seeing, rates go down, and that wasn't happening. So you had the dollar falling with the U.S. equities, and it was like, whoa, gold was the only thing going up.
But again, I've done this a long time. I know how the traders react, and I know how the narratives get, they take the ball and run with them. So I was pretty comfortable, surprisingly comfortable given the panic that was out there. I mean, you had reason to say, we're breaking all kinds of technical levels on the stock market. Yeah, this thing, and yet I didn't flinch at all. Like, it is my target, because I saw pretty clearly this was an emotional sell-off. People were adding 2 and 2 and getting 8. The bearish story, the narrative just, they take the ball right with it.
So you don't think, there's two things at play here, right? Like, the Fed can ultimately become the buyer of last resort and just start buying everything, but then that has problems of its own. But you don't think the debt, 37 trillion heading to 40 trillion in a hurry, is going to dissuade countries like China, Japan, whomever, from participating and stepping up at these auctions and buying our debt?
Yeah, don't forget, we are still, as much as people want to dismiss the U.S. and say the dollar's losing its reserve status, or the rest of the world doesn't see us the way we see ourselves, or what have you, or Trump's alienating our trading partners, what have you, they don't have a lot of alternatives. Where are you going to go and feel safer? I mean, we still have a system that most people say is the most trustworthy, backed by, the most stable policy. Even if you have views that I don't have about Trump, even if you do, you still look and say, this is still a country that's come through. Hey, we came through 4 years with a president that wasn't even aware of what was going on. So, I mean, I think this is a step up no matter what you think of Trump.
That's true.
All joking aside, it really is a case where the dollar, both the dollar and the U.S. Treasury, is something they can't just walk away from, particularly with the balance of trade issues. I mean, China has to put their money somewhere. There's exchange issues there. If you're selling so many goods for dollars, you got to do something with those dollars. So it's not wholesale. People at the margin, things can happen at the margin. They could lighten up on their treasuries at the margin. Other countries could lighten up on their treasuries. Wall Street tends to be all in or all out. They're bailing out of the treasuries. They don't want our treasuries. So I'm not worried about that. Secondly, and I've had this view for a number of years, I've said when we get to the bust, part of the reason we're going to get to a bust is because the Fed's attitude right now is going to be carried forward. They'll ease, I think, this quarter, but they're going to be behind the eight ball for a while into this recession and ultimately into the bust, because Powell has etched in his mind, I want to be Volcker. I don't want to do what Bernanke did. He said it over and over. We're not going to blow up the money supply again to bail out Wall Street. So all through a time when we're going to be in a, like I said, potentially the biggest financial crisis in history, meaning bigger than 2008-9, and the biggest central bank in the world that does most, they all do it. At the time when you're going to need liquidity more than you ever needed it, Powell's going to be, I'm the Volcker here, I'm going to be the disciplined guy, and we're not going to do that again. I promised you I wouldn't do that. They will do it. I guarantee you that the easiest prediction I can make is that the balance sheet could blow up to 30 trillion. Or more in response to a free-falling financial system, because they waited so long, because they kept thinking, as long as we stay the course, it'll right itself. And then all of a sudden they see banks failing across the world. And it's not just Powell or not just the Fed. It's the ECB, it's the Bank of Japan, it's the Bank of Canada, it's probably China. They're all going to be sitting on their hands to some degree, or at least easing a lot less than they did in 2008-9 initially, thinking, we made that mistake, we don't want to make it again. And then it's when the deer in the headlights moment comes where they go, oh my God, we can't worry about that. We got to save the system. Then you're going to get money after money after money. So I've never been worried about who's going to buy our debt. I can guarantee you that the Fed's going to buy every single debt instrument they can find, U.S. debt instrument they can find, if they're trying to get 20 trillion into the system. Don't mistake what I'm saying. I'm not saying they're going to go from 0 to 20. They'll put a couple trillion in and say, that's it, and then sit on their hand, and a month later, nothing's changed, going down, and then another 3 or 4 trillion. That's it. It'll take them several months to get to a point where they say, we just got to do whatever we have to do to save the system. We're going to be the buyer of last resort for at least the next 12 months for sure.
So U.S. dollar short term, you still see it going down, low 80s on the index, but during the bust, you're expecting it to soar.
Yeah, I think between now and the bust happen by the end of the year, the dollar could continue to go down early in the bust. Because, as I said, they'll be easing. So there'll be some concern that, gee, we're doing it again, even though it's not nearly what we should be doing or what we did last time. There will still be plenty of people on Wall Street saying we shouldn't be doing this, and he's putting more dollars out into the system. He's printing more dollars. And it'll keep pressure on the dollar into the early part of the bust, is my guess. But there comes a point, there's a crossover point in the bust where the whole world says there's only one place we go if we get this scared. It's the U.S. So I think probably within the first quarter of the bust, or first third of the bust, certainly, you'll begin to see the dollar get bid up again. I think you could go from 82, assuming that's the number, back to 120.
That's what happened in 08. That's what happened in 2020. But this most recent crash, and it really was a crash, people were dumping the dollar and buying gold. Trend's going to continue.
Time in the past where the dollar didn't get bid up initially in a sell-off. We tend to use
recency bias.
Recency bias, and say, well, how come? I don't worry about short term, because there was a narrative out there. There was a reason maybe why the dollar the dollar was already rolling over. And there was reason for people to doubt Trump's policies, and think that this madman's going to blow us up. I'm not really surprised that we had that situation. It was kind of, the momentum was already on the downside anyway. And I think we have been for a number of years kind of the place where the foreigners put their money, where when Trump alienated Canada, Mexico, and Europe, you started seeing people, I think, taking money back.
I don't know if that trend will be so quickly reversed. I agree with you that the U.S. is so intertwined in the global economy that the idea of operating without the US dollar and not being central is a ways away. But I do see a trend in Europe and Asia of saying, I don't know if they're going to be getting in the US's corner as quickly as people think once a trade deal is done. I think there's been a lot of damage done in terms of trust and reputation. It may be going that way for years to come. Have you ever researched what a post-Bretton Woods, monetary system might look like? Have you ever sort of whiteboarded that or give it any thought?
There's talk about gold-backed dollar. Going back on gold standards. And, well, not just BRICS. I think Trump's floated the idea of doing something that, what I keep saying, because I was talked about even before Trump got elected, is, certainly the Austrian school. That's their whole thesis, and it's coming a lot sooner than I think it's coming in their minds. And I've said it would be suicide even if it's a very small, not a token, but something that would at least say, hey, gold playing a role in this now. There is an anchor on this now. If we did that, it would prevent our central bank from responding to a free-falling financial system. They would either have to, ultimately, they would have to scrap that. Let's just theoretically say they did it the next year. If we're not some sort of a gold-backed dollar, and this thing hit, you're not going to all of a sudden say, well, we tried that for a month, let's reverse ourselves. You're going to sit there and say, and especially given, central bankers and Wall Street, frankly, who think what we did in 2008-9 through until Powell took over was lunacy. So they're going to all say, well, it's a good thing we have a gold-backed dollar now, and that we've tied the central bank's hands, until all of a sudden you're watching this thing spiral down. I don't think we're going to get there that fast, obviously. Even if Trump has an idea like that, or the administration has that kind of an idea, it'll get scrapped during the bust and might come back down the road. This monstrous flooding the system with money is going to lead to the biggest inflation cycle we've seen.
Let's talk about that. Let's. I want to hear if any of your price targets have updated. Let's maybe just go pre-bust with some of the key commodities and indexes, and then post-bust.
Okay. Yeah. So I like I said, I raised SP to 8,000. I might want a precise date, and I've been notorious for pushing it out because the cycle pushed it out. I've been saying it could happen, and I use the word could. People seem to forget could isn't would. At least they tell me they show me they forget it on Twitter. It could happen by the end of the summer, which means by the end of August or the end of September at least. So the next 5 or 6 months in a parabolic, it can happen very fast. You could cover, as crazy as it sounds, you could cover all that ground in 3 or 4 months, or it might take 6 or 8. I don't know. I'm not worried about that. The clock's not going to strike midnight and the market turn into a pumpkin. So, why are you worried about some precise time? You just play it while it's going. So I raised my SP to 8,000 by the end of this cycle, by the top, and I believe this is going to ultimately be a 43-year secular bull market top that started in August of 1982. And I raised my NASDAQ target to 27,000 from 25,000. I'm definitely in doing that. I'm saying I am in that camp that believes that tech will still lead us in this last leg up. I think the melt up really has been this whole leg from 2022, or certainly from the lows in October 23. But this threw a curveball into it because you had a 20% decline in the S&P. So I was looking for this to be the leg where you'd have maybe 5% pullbacks, but not 20. So this is the third leg that I think takes you to the top. And I didn't change my Dow target, still 55,000. My Russell target, which is the most controversial because it hasn't moved yet, I still say 3,300. So if you do that from where it got to, my trio where it got to, 1,800 anyway, maybe 1,700, it's not quite a double, but it's certainly over 80%. And people think that's nuts to say you could see that in the next 6 months. Like I said, it runs to 9 months instead of 6 months. so be it. I mean, I'm not worried about the time. Any way you slice it, it's going to be the biggest rally in history, is the way I see it. So not just Russell, I mean, the whole market covered that ground at that time.
Just human psychology is just the most amazing thing. We can go from this fear that everyone's just gripped with this fear and confidence is lost forever. We've broken support, it's over. The way it's shaping up, Trump can ride in here, secure some deals, confidence will get shored back up, and you can just kind of see everybody coming back, right? And man, to go from fear to euphoria in a matter of, 3 months, 6 months, there's a part of me that thinks the confidence was shaken so strongly that some people you will have a hard time throwing caution to the wind and chasing this market. When the S&P goes through 6,000 to a new all-time high, you know what? It's happened. It's going to be a little more challenging had we not had this dramatic sell-off. I think it will be harder to get to those highs, is what I'm trying to say.
I view it the opposite. As I say, and not to you, but say to people on X, watch and learn, because this is going to be a learning experience for everybody. I mean, I could talk about it, but I'll be flabbergasted too. But I have said for decades, investor psychology is the most powerful emotion in the world. It's more powerful than love or hate. It will get people to do the most insane thing out of fear or out of greed. Amazingly, and I was talking about this when it was only down 3 or 4%. People fought this market all the way up. They only capitulated and started talking more bullish because of the momentum of the tape after it got above 5,000. Wow, this isn't going back to the lows. Gee. And then they start raising targets and people are saying, they're copying you now. I don't know. It's just psychology. They're going with the tape. They weren't getting up to my levels, but they were, 6,500, 66, 6,700. Somebody might have 7. These are people who told you it was going back to new lows all the way for 2.5 years. But then as it started to lose momentum, like I said, they had one foot out the door, you could see that they didn't have any conviction. One thing I say is my call, as bullish as it is, as crazy as it is, it's coming with high conviction. They had no conviction. They were just there because of the tape. I knew as soon as the tape disappeared, they had nothing.
They were gone.
They thought stocks were way overvalued and going to have to go down at some point. So it was very easy for them to go transition from, I'm cautiously optimistic to, oh my God, I'm really bearish now. And the more the tape went down, the more that fed into their fears. And then you started seeing the leapfrog of how low can it go.
And those same people are going to do a 180, you're saying, when the market, they're going to do what they did before and they'll get right back on the train.
Not right back. It will be gradual. In other words, what drives, that's why I say a wall of worry is fuel for the next move up. There are different levels. The early people will jump on. Well, first you'll have short covering, which you saw some pieces of that big run up that day. But there's a lot more short covering to be had because we also got the retest that caused people to get bearish, more convinced again that we're going to new lows. So there's a lot of shorts in the market. That will help fuel the first advance. And some of the early people that will say, I was bearish, but boy, the tape's telling me I'm wrong. And they'll do it. Maybe the faster traders, the smarter traders, whatever.
Yeah.
A lot of the people won't shift from bearish until we're at new highs, and even then there'll be a bunch of them that won't shift until we're 10% from the top, and then they'll be yelling at me for getting bearish. They'll be saying, "Don't you see this thing has legs? It's got 3 years to run. You're turning bearish away. You're going to miss a lot. It's going to 10,000, whatever." That will be what you'll see at the top. So it's not that they all turn from bearish to bullish in the first third of the move up. It's a gradual thing where more and more will jump on the bandwagon. Most of them will see it as a bear market rally until we see new highs. Yeah, we saw it, 2022 to 23 or even 24, we saw that. It was only after it got above 5,000 that that a bunch of those bears said, it's no longer a bear market rally. This is, this thing can go higher. They still were bulls, but they admitted that it was not.
I remember that. It's amazing to see those guys capitulate and just throw in the towel. Okay, so you've given me some of your indices, pre-bust, some of the highs. What about commodities? So this is the pre-bust. What are some of the highs that we get to here before August, September, the top?
Before I get to commodities, one other one I want to point out is SMH, semis. I believe they are going to lead just like they led in the first 2 legs. They've had a tremendous consolidation, particularly with what happened in the last few weeks. And people have really kicked them out and said, they're done.
They got crushed, David.
Going into this sell-off, I had 400, and I've kept my 400 target, not because I'm stubborn. I believe, if anything, I'm low.
How low did they go?
Got below 200. Yeah, I don't know where it is now. It might be just above 200, but got down to whatever it did, 180 or 90 or whatever. So it's more than a double from here and can happen in 6 months. I don't worry about which month or how many months, but potentially could happen in 6 months. That seems insane, right? Except go back and look at the other legs in semis. I mean, we're coming from a higher level than the past ones or what have you, but semis are, kind of the story of this cycle. And AI is still around. It's not going anywhere. There's still a lot of growth there, and it will reignite as the tick moves up. The confusing part is I'm talking about we could be in a recession before the end of this quarter, and normally that's as cyclical an industry as you get. But you've got other things, AI and things that may not be one of the early cyclical unwinds. So SMH 400, commodity-wise, I think materials are going to play. Copper, I have a $6 target. I haven't changed it. And copper got hit hard in that sell-off, and both the producers and the metal. Metal went down to $4, I think, from $5, and it's right back up towards $5. The producers are coming around now. They're just beginning to really catch up again. I think you've got big runs coming. CLPX, I have a target, which is the copper producer ETF. I have a target of 75 on that, and I think it's under 40 as 38. So that's a big run. I think the industrials will play XLI. I forget what they have for target, I think 180. So that's a big run from here. XLB, I have a 150 target on that. I'm not sure where it is today, but also though, financials, I think financials will do fine. XPD is a broker. So there's big runs coming. It's not just the market.
What about the precious metal space?
Well, I raised my target on gold at the same time I did the S&P and NASDAQ raise. I raised my target on gold from 3,400 to 4,000. And at the time I did that, gold had a correction back to 3,000. So
David, you called the 3,400. I mean, it just crested above 35 before the correction. But in December, what was gold trading at? 2,500? And you called the 3,400 almost.
I had raised my target. My target had been 3,000. I raised 3,400, maybe in September. I can't remember. But
when we spoke in December, you were calling for 3,400 gold, and I think it was trading at 2,600 or something.
You're hearing a lot of talk the last few days about gold peaking and going down. I'm a little worried about what I saw on a intraday on the 10-day chart that we could see back to 3,200.
Do you like the senior producers? Do you like the senior gold producers in general?
I do, and I also like the juniors. And more importantly, I think silver is going. I've had a $75 target. So while I raised gold's target, that 75 is still a long ways away. So I left that alone. We're on the verge of a catch-up rally in silver and silver miners. So both the majors and the minor silvers, I think, have plenty of upside ahead. I've got SILJ, I have a target, I haven't changed it, of 35, and the stock's, under 13. So you basically got, 2.5 for almost 3 times your money coming there.
They have really lagged. I mean, they've just been on the sidelines watching this whole thing.
There's people a lot smarter than me in terms of tracking what goes on in the banks and stuff that talk about it being manipulated and held down by the major banks because silver is important to the defense industry, et cetera. I don't know if that's true or not, but for sure it's lagged. What I do point out, though, is that the perception is much worse than the reality. That if you go back to silver's low, gold and silver have pretty much tracked. Whereas in a bull market, usually silver does outperform. Silver's almost doubled from, it got down to 18, I think, and got up 35 the other day, and gold's pretty much doubled from 16, 20 back then. So as much as the perception is that silver hasn't done anything and gold's been great, traded alongside each other. So it's more perception and reality. And like I said, that's still historically, it should be catching up now, and I think that's about to happen. But boy, people are down on silver. And part of the reason they're down on silver is really the miners. Silver miners have really not done well at all.
No.
So,
well, with oil trading down, I mean, the margins for these companies, for all these major silver and gold producers.
You go through the big ones and you say that, number one, they should make a lot of near-term earnings because of the margins. But number two, as that asset becomes more and more valuable, they have massive assets in the ground. You just look and say, how come nobody's interested in? I think there's a big catch-up coming. I presume it's because people just assumed gold was going to disappoint again, roll over and go back. But I think they're going to become believers now because it's got momentum. The miners, to me, is probably where the bigger money's paid.
I tend to agree with you. Let's talk bust and post-bust. The bust, we've kind of explained, right? I mean, it's just going to be absolute carnage. I'm more interested in, the post-bust reaction and some of those forecasts.
People want to know, why do I have bust as opposed to just a hard landing or just a tough recession? It's because we have 320 trillion or 330 trillion in global debt. We came through a pandemic that everybody seems to have forgotten because it's now several years removed. If you really dig below the surface, that pandemic changed a lot of things and basically put at risk a lot of small businesses and other businesses. Just look at the auto companies. Not only do we have the pandemic, but we had big changes in terms of what the Biden administration put in for climate change and things. So, you look at GM and how much money they put into electric cars. Now they're having to back off because the mandated demand wasn't the same as consumer demand, both in big and small companies. Fragility below the surface. You got to look statistically and say, gee, we're far removed from that crisis in 2021. But under the surface, there's lots of businesses that can't find help because of the pandemic. Kids aren't going out to do the part-time work. We doubled our minimum wage. That took care of their margins. They're getting by. Some of them are doing well, but lots of them aren't. I think there's a lot more economic fragility than people realize, more than normally we would have going into a recession. So I go massive leverage plus economic fragility really caused by the pandemic and the changes that happened during that period, plus central bank policy error. Because of what happened in 2008-9 and the decade after that, all the central banks are convinced we can't go back there. It was necessary. And now they determined that it was a bad thing. They're going to make the opposite error. Instead of going too far, they're not going to go nearly far enough.
They're going to wait too long.
And when you're in a bust, if we're truly, I talk about a free-falling banking system around the world or a free-falling financial system, we got a little taste in the last few weeks just from markets. But if it's the whole system, it can unwind in a hurry. We saw it in 2008. We almost lost GE. The commercial paper market froze up. So when you hit that magic mark, it can happen in a hurry. Again, I find this is easy part of my forecast is human nature, on two sides. One, I can read Powell like a book. I mean, I know what he is, and I know where he's basing his stuff on. And I've been very supportive of him or defensive of him because he got criticized a lot in the last few years. And I said, if you look at the last year, he was more right than most of us, in terms of by staying the course and not, he brought down inflation without causing a recession in the last year. Now, going forward, I'm going to be a lot more critical, I think, because of what I'm talking about here. But he's sincere and transparent. And what more do you want from him? He's convinced that his mandate is to be like Volcker when everybody else is telling him he should ease, or when he's going to be the big boy in the room that's going to say, no, we got to, inflation's too important. So, it's pretty easy to predict that he's going to be slow off the mark, and slow in two ways. He's going to, on the one hand, be slow to act, and then maybe more importantly, be very measured in his act. So slow to recognize the degree of ease that's needed. It's not just timing, it's right sizing. When do you get your policy right sized to the point where it actually makes a difference? That's going to take many months for him to get there, because on the one hand, we just came through 2008 and it's fresh in our minds of what we did wrong there, or what we did in excess there. So he's fighting that. And number two, you're going to have something even bigger than that, maybe faster than that requires you to move even faster. And you're just the opposite. You're going to be moving slower. So when you put all that together in the soup, you come up with a bust.
And during the bust, bonds and the US dollar are going to outperform. Everything else is going to lose between 50 and 90%.
Yeah, I think gold probably is more towards the 50. If you go to 4,000, I think you could go back to 2,100 was a breakout point. So basically almost 50% pullback. Silver is more industrial, more cyclical. Silver could be a 70%. So they're going to be more like the market. But treasuries, I think, are one of the very few assets that will actually appreciate during the bust, and the dollar. at some point, the dollar. And then beyond that, it's, FDIC insured savings and not much else that I think can hold on.
And you expect the bust to begin before the end of calendar year 2025?
I don't know if I'd say I expect that. Could begin late this year. Doesn't have to. It might.
Yeah, the data points can change. It could push out into 26.
But I'm pretty sure we'll be in it for all of 26 or most of 26. So whether it starts, the latter part of this year or early next year, I think 26 could be a rough year. I think it's a 12 to 18 month downturn. So depending on how fast they act is how fast it will come out. You could be out of it as early as the beginning of 27, or it might stretch to the middle of 27, something like that.
Okay. And then we're going to begin the biggest boom in equities and commodities, basically, in world history.
Market will turn up well before the bottom of the bust. When it's turning up, we're still going to be smack dab in the middle of the bust. But let's say the market topped out in August or September. Again, hypothetically, it's at the top, and the bust started by the end of the year. And let's say the bust was 12 to 15 months, so that you're out of the bust by the end of the first quarter of 27. You might be starting a bull market, the new cyclical bull market in stocks within a year of the bear. So, the bear might last 8 to 12 months, something like that. You could be even seeing a turn in the market in the summer of next year. But, again, I don't know. We don't even know when we're rolling over yet. But it'll start well before you'll feel like you're out of the bust. And then it's going to be a commodity-driven cycle. Massive money, because it's not just the Fed. It's money out of every central bank to levels they've never done before. And that includes, people back China. It'll be everybody printing money like there's no tomorrow. With a lag, and that lag probably is a year or more, you'll begin to see the results of that, the green shoots and demand coming back. You're coming out of, I think, a deflationary bust. So you're coming out of negative inflation and a very deep recession, and banking system broken and having to be repaired. But you will see all that money will jumpstart a recovery, and the reason it doesn't take 5 years to get through like a depression is because it's money. It will begin to fuel demand in various places. Consumer, even I argue that consumers not only going to be facing potentially an 80% drop in the stock market, probably a 30-40% hit to their homes, their assets are going to be really floored. The pension funds are going to get killed, so that'll be down. So the consumer is probably going to be slow to be the igniter, even though they're usually the early push. I think the story will be reshoring and all that Trump's trying to do. I keep saying that a lot of what his policies are, deregulation, all those things, are going to be very much appreciated on the other side of the bust. They're not going to have much impact to prevent a bust. I think on the other side of the bus, they will help reignite the economy. It'll be industrial driven as we build factories. Factory building or bring manufacturing back here means a lot of demand for commodities. Whether it's steel, whether it's aluminum, whether it's lumber, all kinds of commodities, I think. And the problem is when you put 20 trillion into a system, it ignites demand, and the demand is you can look at it from the money standpoint, but then look at it from, you're going to blow up demand so much faster than you would normally. And we've been, for 20 years probably, rationalizing down our capacity in commodities. We've discouraged mining because, prices were lower. You look at oil. Oil's one of the commodities. Oils, we haven't been doing a lot of deep water drilling because we haven't had to. So all of a sudden, you're going to have this huge demand in energy, for steel, for all kinds of commodities, and they're not going to have the capacity to satisfy it. So the only thing that can go then is price. You're going to have massive demand outstripping, and price goes through the roof. So I've said $500 oil is a real possibility by early next decade. It's not like it all happens first year or two out of the bust. Commodities cycles tend to be shorter. They don't play out over 15 years like we've seen this cycle. 5 or 6 years, certainly. So I'd say early next decade. That doesn't mean 2030. It might be 2031 or 2, but early next decade, we'll be at $500 oil. And I think oil goes to 30 in the bust. So you go from 30 to 500. Copper, which I said can get $6 pre-bust, could go to $1 or $2 in the bust, and then go from there to $20 or $25. If you want to talk inflation, PPI is going to go straight through the roof.
Well, copper at $25 will get you there pretty quick.
And then people go, well, how are we going to survive that? This isn't something anybody can engineer. It's the forces that all come together. We're at the end of what I call a 90-year super cycle. We're in the last decade of a 90-year super cycle. All those excesses and the built up cycle to cycle to cycle from 1940 on, we're now at the point where it all explodes into this.
The debt monster coming alive.
Every cycle, it's taken more money to pull us out of that cycle, and we're now at the point where 2008-9 was a biggie. We're about to ratchet it up from there, and that's why it just explodes.
The granddaddy's on deck. Silver to 500, gold to 20,000. Have you changed those targets?
Yeah, that's still my numbers.
So that inflationary boom is going to last 3, 4, 5 years, and then we're going to enter this greater depression. I saw a glimmer of hope there. I saw a little bit of a silver lining in that some of Trump's policies may soften the blow and allow us to muddle through that period. Is that what I'm hearing?
Yeah, if I'm going to be wrong, because I still do think collapse is the most likely scenario, but if I'm going to be wrong, Trump's policies are going to work in spades, and we're going to have a freer world trade situation where, the thing that's hopeful, and yet it's so much to overcome that I'm skeptical that it'll happen. He is doing yeoman's work and trying to fix this thing, but it's a huge thing. To think that we could actually shrink the government pie and get back to capitalism and letting the free market, which is much more efficient, do a lot of the things that we've been. As you hear these stories and see what Doge is uncovering and all kinds of places and a lot of the corruptness, it looks like we pissed away trillions of dollars just in the last 5 or 10 years. Trillions. And we're sitting here acting like, gee, if we shrink the government, what are we doing? But now we're finding out that literally trillions of it is going into people's pockets, corrupt politicians' pockets, and all their hangers-on that are with them.
And not just in America, but around the world.
Right. We're just handing out money left and right. These NGOs are just basically money laundering schemes. If truly we can tackle that and the courts don't stop everything, there's hope that as bad as it was, as awful, as we're pretty resilient. Our system to have withstood this tells you we're a pretty resilient system. And if we can get halfway back to being a normal system without this graft, that maybe there's a glimmer of hope. As much as I'd like to believe that, it's a Queen Mary, and I just, I'm still skeptical that we can truly. Because it's not just the U.S., it's the world. We got debt through the roof everywhere. This is really the point of why I'm skeptical that it can happen. If I'm right about what inflation is going to be post-bust, if the next cycle is truly going to take us 25% inflation, how do you solve the debt equation? Interest rates will follow the inflation. And I was in the business in 1981 or 2, we had 21% T-bills at that time. We had 15% long bond at that time. This time could exceed those numbers. How do you solve the debt equation? And we can't fund it at 5% or barely fund it.
This is what I mean.
So it's very hard for me to see how we get there.
I tend to agree with you, and that's where I always get stuck. Even at 4.5%, 5%, the interest on the debt alone, it's so big. And, the U.S. is the biggest debtor nation in the history of the world, which also leads me to fear that they will abandon the dollar at some point and stop buying our debt. The Fed will have to step in, buy everything, and that's only going to fuel the inflationary.
My guess is the market will take the dollar down in the second half of this decade. As we approach 2030, I fully expect the dollar to be under 50. But I don't think it's there.
That's as the Fed gets serious and it's on its way to 20 trillion and the inflationary boom and gold is ripping to 20,000, the dollar will fall below 50. And then as we enter that greater depression, will it come back, or is it just going to be relegated to...
I have a very hard time knowing what anything's going to look like, because it truly is a worldwide collapse. If I'm right, we're looking at the end of the system we do. I just fear it's going to be survival of the fittest type of an environment, not just here, but across the world. We're not solving the world's problems. We're trying to solve some financial problems, and Trump is really trying to help Main Street, et cetera. But this thing's going to be bigger than all of that, I think. As I like to say, I think the macro trumps Trump. As much as I am a huge supporter of what he's doing, and I think It's the only chance we have to save the system. I'm just fearful that the macro trumps Trump.
We're too far down the road.
Yeah, exactly.
David, on that note, we'll leave you. Thank you so much for joining us. Wish you a wonderful rest of your day.
Yeah, thanks, Alex.